Okay, good morning. This is 5 minutes past 1 a.m. Nigerian time. My name is Michael Asian, and I have the privilege of sharing these tips and, of course, this strategy on how to buy crash. If you watch my previous videos, I have given out top-notch strategies on how to sell crash, on how to buy boom. And so people have been asking, how possible is it to buy crash? We see that you buy crash, so how do you do it? And that's what I want to share with you. It's very simple. This one is pretty simple, and that's it. Now, you can buy crash in two forms. You can buy crash either on a long-term basis, on a swing basis, or more or less like a scalping kind of stuff, where you are never caught, where the spikes or the drops never catches you. So how do you do that? All right, so the first thing here is that my checklist says I checklist on how to buy crash and sell boom. If you must buy crash or sell boom, then you must follow the instructions below. Now these are the instructions for buying crash. Rule 1: crash must be in a major bullish trend. Of course, you can't buy crash when the trend is bearish, because you will be caught many times. It's terrible. You can't do that. So for you to buy crash conveniently, however, it must be in a bullish trend. To confirm that a crash is on a bullish trend, the 48 SMA, for those who have seen my videos before and for those who will see the video I'm going to show you now, the 48 SMA, which is yellow in color, must be trending below the candlesticks. That's to say the candlesticks must be above, and the 48 SMA moving average must be below the candlesticks in H1 time frame and also M30 time frame. Now look at it. If you come to crash, let's come to crash. Okay, crash 1000. Let's say. Okay, when you come to crash and then you come to H1, you will discover that the yellow line here is trending below and the candles are formed above. So that's automatically to tell you that it's been bullish trend for a long time. And if you watch my previous video, you will know when it started becoming bullish. This is when bullish was confirmed. As soon as the yellow crosses over, and then there was a cross of the red and the blue moving averages, it became a bullish trend from that time going forward. If you check it, there's not been any time it came and broke the yellow 48. So the yellow 48 is majorly for trend direction. So that's the first thing you need to check, whether this is truly a bullish trend. Okay, the next thing you need to check is, if you want to buy it, for people who are swinging, they would have bought it a long time ago, and then they will keep their position running irrespective of the spikes. Okay, you have a target, is a long-term stuff, so you leave it. But for those of you who don't want to hold it for too long, this strategy is basically for people who want to buy crash for 20 minutes and sell boom for just 20 minutes, and then you get out of the market. So how do you do that and you're not caught? Now look at this. This thing must also, the yellow line that is trending below the candlestick must also be the same for 30 minutes. That's to say, it must be the same for 30 minutes. You see, the candles are above in 30 minutes also. That is a 30 minutes time frame. Good. When that has been secured, the next thing you need to do, okay, is that you will have to switch to 5 minutes time frame. All right, when you switch to 5 minutes time frame, like I said, you have to wait for crashes. Okay, that was rule number 1. Let's go back to the checklist. Rule number 1 says crash must be in a major bullish trend, and I've just told you how to confirm that it is in a bullish trend. Rule number 2 says always wait for a crash or drop before entry. That's to say, even if you've confirmed that the trend is bullish, or except you are swinging it, don't just jump in, because it could be that crash has been buying and is going to drop. So you don't just buy because it is in a bullish trend, otherwise the drop will affect you. So what you do is that you always have to be patient, wait for it to drop. As soon as it drops, and you must be in your 5 minutes time frame. The drop must touch or near the 48 SMA on M5 time frame where the buy entry is taken. Let's look at that. Now, as soon as it drops, not like in this case, I said, remember, it must drop and touch the, like this one, must drop and touch. Those are what I'm talking about. Just must drop and touch just around the yellow. You see that? Not in this case. This case is violated, and I will tell you why. One of the reasons why this case is violated is because there is a cross of the red and the blue and 5 minutes, but in the previous one the red never crosses the blue, so it continues to buy up, right? Okay, so but in this case this one is going to sell down from this point. That is not what we're looking for. Now we're looking for a situation where the red does not cross each other, like this one, like what you're seeing here, okay. Now when this happens, this is going to come down. All right, so that is not what we're looking for. And remember, this must be in the third zoom level. This is zoom 1, zoom 2, zoom 3. Now when it crashes and come towards the 48 SMA moving average, what do you do? Now let's go to the next thing. Rule 2 says always wait for a crash or drop before entry. The drop must touch or near the 48 SMA on M5 time frame where the buy entry is taken. That's to say you must be on 5 minutes time frame to initiate a buy. Now rule 3 says confirm the buy's readiness. A buy is ready when the crash drops towards the 48 SMA on M5 and the and is emphasis, not just that, and the stochastic oscillator lines, the green crosses over the orange. The green crosses over the orange at 10 zone level of the stochastic and then pointing upwards. What does that mean? Look at this. As soon as this dropped, to this 30 level, there was a cross of the green over the red. When this one also dropped, there was a cross of the green over the orange. And then as soon as you find this cross on 5 minutes, don't be afraid, just buy. But remember, there must be a crash and this must happen. Now look at it, and then after that you just buy. Every time I can show you over and over again so many examples. Whenever there was a cross here, it will buy. Now look at it. It bought for this long time before it crashes again, and then there was a cross. It bought for this long time. That's for this one. This is for this, and then it crashed again and it crosses over, and this one the long buy, just like that. If you check, every time it crosses it goes down. But you see, we can't do it for this one because this one is not clear. We can't find a clear cross. The cross must be like this and pointing upwards. This one will not work. This one is wrong because already there is a cross of the red and the blue. So you have to take note of that point. It's very important and it's very crucial. Okay, having said this, let's go back to the checklist. It says confirm the buy's readiness. A buy is ready when the crash drops towards the 48 SMA on M5 and emphasis, the stochastic oscillator lines, the green crosses over the orange at 10 zone. This is what we mean by at 10 zone. Sorry, this is what we mean by at 10 zone. This is 10, okay, this is 90, so it crosses at 10 zone, right? So that's what we're talking about. All right, so we go continue. 10 zone level of the stochastic and pointing was. Now rule 4, buy for 20 minutes or 4 candles in M5 or quit as stock lines approaches the 90 level zone. So they say you should buy for just 4 minutes. That is 4 candles, meaning 20 minutes. If you check all of this, the thing bought more than 20 minutes, but for safety just buy for 20 minutes. Buy for 20 minutes and that will be okay. You will never be caught. So you buy for 20 minutes and then, or you quit as you observe that this has gotten here. Maybe you started buying as soon as you saw this cross, but as soon as it gets to 90, you have to quit because that was what brought this man down. You have to quit. So that is how easy it is to buy, crash, and that's it. To sell boom, let's go to boom very quickly and see if we can find any. Okay, this was a very good one, but it was late. Let me look at this. Okay. Okay, let me look at it. There is no, all the booms are in buy trend, so we may not find a very suitable situation. Let's try and go back to when it was in a sell trend and see. Okay, this was a sell trend. First, you come to H1 and you're sure that the trend is selling. This has been a long buy trend. It will be difficult for us to find. Let me go to crash 500. It will be difficult for us to find. Okay, this was a sell trend to a point. Okay, now we come to 30 minutes. We said the same thing must happen in 30 minutes for the sell trend, like what is happening here. Now after that, the condition for selling boom comes. Rule one, boom must be the major bearish trend, and to confirm that is 48 SMA yellow must be trending above the candlestick in H1 time frame and also M30 time frame, what we just explained, but in the opposite. Rule 2, always wait for a spike or boom before entry. The spike must touch or near the 48 SMA and M5 time frame where the sell entry is taken. That's what we're saying. You come to 5 minutes time frame, you come to where you have a sell situation. They say it must spike to touch the blue, sorry, the yellow. Sorry, this is not, sorry, 5 minutes. Good. Good. You must allow the spike to touch the blue, sorry, the yellow, like what happened here. Please look at this. Remember, first it was in a sell zone. You must allow the spike to come and touch that yellow or near it in a major sell trend. When that happens, you will notice that this also will cross each other. Let's go and look at it. Look at it. Always wait for a spike or boom before entry. The spike must touch or near the 48 SMA on 5 minutes time frame where the sell entry is taken. But for this to happen, remember that the sell trend must be what? Must be bearish, the major sell trend. Confirm the sell's readiness. A sell is ready when the boom spikes towards the 48 SMA or on M5 and the stochastic oscillator lines, the orange crosses over the green at 90 zone level of the stochastic and pointing downwards. Now look at what it's saying. This what it means. As soon as these spikes and touches here, this would have crossed each other, and then they said this is at 90, remember. Then the last rule is that they should sell for 20 minutes or 4 candles. If I count the candles of these candles here, is more than 30 minutes. Okay, because each candle is 5 minutes, so we have 5, 10, 15, 20, 25, 30, or more than 15 minutes. It has been selling for that long. Okay, and that is because, or you can also quit when it gets towards the 10 here. You quit because it's going to go up, like what you're saying there. So that is basically how to trade. You can only do that when there is a spike. Now when it spiked and got back to towards the yellow, like what happened here, like what is happening here. I mean, these things are very easy and clear. You can only find them as it comes to this point. Look at it. There was a cross, it sold, and when it gets here, there was a cross, it sold. Okay, so that is exactly how the thing works. It must always be in a downtrend, right, until the trend changes, and you don't have to stay for too long in the market. I hope this will help you, and I really pray that you will get this and then be successful in your trading and do all that you can and all there is to do. I wish you very well and believe that you will succeed. My name once again is Michael Essien, and I look forward to seeing you succeed in trading. Thank you.